What's up, guys? Welcome to Bullish Bets. On this channel, we cover all things related to stocks and investing. In this video, we're going to talk about the price action of DocuSign with respect to their earnings report. Keep in mind that we're not financial advisors, and this video is for entertainment purposes only. Make sure you do your own research before making any investment decision. So, DocuSign recently had an earnings report come out on March 11th, 2021. And with the earnings coming out, the price dropped from a high of around 225 to a low of 209 within a day. That's around a 10% drop. Usually when the price drops like that, there's something that's happening with the earnings report. Either they didn't meet expectations in terms of earnings, or they didn't meet expectations in terms of revenue. But for DocuSign, this wasn't the case. So the expected earnings for DocuSign was around 22 cents a share, and it came out to around 37 cents a share. That's a 15-cent difference, which leads to around a 68% beat in expected earnings. So you're probably thinking, it's probably the revenue that's causing DocuSign to fall. So the expected revenue for DocuSign for Q4 was around 1.4 billion, and it beat it by a little by coming out to be $1.45 billion. That's a $50 million beat in terms of revenue. And it's growing fairly fast compared to 2020 too. It went from 974 million to around 4.45 billion. On top of that, looking at this earning presentation, it shows a lot of strength for DocuSign, even with the price drop, making it more intriguing and more exciting to get in at this time. The net dollar retention for DocuSign increased to 123% compared to Q4 2020. It was at 117%. That's a 6% difference in net dollar retention. This means that each customer that DocuSign acquires, they're spending 23% more compared to the following year. That means that customers are either liking their products and DocuSign's increasing the price, which they're fine with paying, or DocuSign is adding more services that customers are willing to pay for. And on top of that, they have a plan to not grow internationally. Their current US market share is around 80%, and their international is only 20%, but that amount of growth gives them a lot of room to grow. Also, another good thing we saw from the presentation was that it went from 84% net gross margin to 85% gross margin. Based off this presentation, the numbers look very good for DocuSign. The only thing that might be affecting the stock price is the guidance that they gave out. The guidance might have came out lower than what they expected. The revenue, the expected guidance for year 2020 full guidance comes out to around 1.963 billion to 1.973 billion. The only reason the stock price might have gone down from this was due to the fact that the growth expectations aren't as high as the analysts expect it to be. And another reason that might occur is people are expecting a rotation from pandemic-focused stocks to more brick-and-mortar open economy type of stock. People are expecting the pandemic to sooner or later end and business returns as usual. But the CEO, Dan Springer of DocuSign, makes a good comment in terms of why this isn't the case and why people will still be using DocuSign with the pandemic being close to an end. So he mentions, we don't believe our new and expanded customers will be going back to paper even after the pandemic recedes. Well, we don't believe life will go back to the way it was before. Of course, many in-person activities will be welcome. But when people found better ways during the pandemic, we believe those will continue and flourish, whether it's total, partial, or work from home, virtual visits, or to medical professionals, or getting a document notarized remotely. DocuSign is adding a lot of new products, and the CEO is saying customers that joined aren't going to leave because it's a new way of doing business. This is what I want to get into. Although the price has dropped, mainly probably due to the rotation from the pandemic ending and the expected growth rate of DocuSign not being as rapid as it would be during the times of lockdowns and pandemic-driven economy. But as a whole, the fast-growing companies have been slowing down. This has to do with the scare of interest rates, potentially being higher, with inflations going up, and a lot of these macroeconomic issues that might affect the stock price. But that being said, DocuSign in itself, you can argue might be a little overvalued based off what expected growth will be, but the digital signature market is going to be worth around $14 billion by 2026. And a lot of these predictions in terms of what the market size will be in terms of in industries are usually underestimates. And digital signatures have been expedited due to COVID, and it's becoming more of a norm in terms of contract signing, all that type of industries, which is very slow to transition to new methods of doing things. In terms of there's a legacy and there's traditions of how things are done. It's the slowest market because the government's involved, the courts are involved. But with the pandemic hitting, it sped up the process, and it's more than likely to hit over $14 billion. I want to bring up this crossing the chasm graph in terms of high growth companies. In our honest opinion, we believe that DocuSign was in the innovator stage before the pandemic. And with the pandemic hitting, it sped it up to probably the end of the early adopters. And this led to that growth that we saw in terms of the revenue from DocuSign. It's because it's pushed to early adopters. But now, with the pandemic ending, people are going to catch on. The major early majority, late majority, and laggards will more than likely hop on in terms of having digital contracts versus paper contracts, because not only is it safer in terms of social distancing, it's more efficient in terms of time, it's more cost efficient in terms of saving money on paper, and it's a better product in terms of organization. You don't have to rescan physical copies into the digital world. It's just a digital copy, which saves a lot of times in terms of contracts, notaries, and stuff like that. You don't have to send people to sign documents anymore, which is a very ancient way of doing business. DocuSign is in the forefront of offering a great product that has a lot of subscribers now. So let us know what you guys think in the comments below. Do you think that the price correction from the earnings is justified in terms of a slowing of growth rate, a rotation from high growth pandemic stocks to a more traditional brick and mortar stock? Or do you think DocuSign is undervalued with the price drop from the earnings, and the expected growth rate will continue? The expected growth rate will be beaten again like it was beaten this quarter. So let us know in the comments below. That's it for this video. So if you liked our content, please give us a thumbs up. We use this as feedback as to whether we're making good content worth watching. Thank you very much for watching again, and have a good one.